a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
If you've been wondering what effect all of the geopolitical tension lately has had on stocks in the market, we kind of see what the effect is on the general market day to day, but particular sectors, all you need to do is look to the Aerospace and Defense ETFs, like our ETF Research Director, Nina Mishra, has done. She's going to bring to our attention what's going on there. Is it positive effect on these ETFs or negative effect?
Unfortunately, positive.
Okay.
So defense stocks have been rising with escalation of tensions between the US and North Korea. And top defense stocks like Lockheed Martin, Raytheon, and Northrop Grumman, they have all hit record highs after President Trump warned North Korea against making any further threats to the US, and said that it faces fire and fury like the world has never seen before. And North Korea responded by threatening to launch a missile attack on Guam. So in general, these stocks and ETFs do well when geopolitical tensions rise. And they had soared after US missile attacks on Syria also. And that is the main reason why these stocks and ETFs have done so well over the past few years, because there are rising geopolitical risk all over the world. And that was, they did well despite military budget cuts in the US and Europe. Now, Trump's budget proposals call for a boost in defense spending, and that should be, again, good for these stocks. And over the past few years, many developing countries have significantly increased their budget spending. Countries like India, UAE, Saudi Arabia, and Brazil. So that has benefited these stocks. And Korea and Japan have also significantly boosted their defense spending in response to rising military spending by China.
So have these ETFs, Aerospace and Defense ETFs, is this just a knee-jerk reaction to what the geopolitical tension that just came about here with North Korea, or has this been a slow build and this is just the icing on the cake?
They have been doing pretty well over the past few years, as I mentioned, because of the rising geopolitical risks and increased military spending in many of developing and as well as developed countries. But they did particularly well after Trump's election, because he called for a boost in defense spending, and they have continued to do well this year, while many of the other Trump trades have faded. This is one of the Trump trades which has continued to do well. And additionally, most companies in this sector had very good second quarter earnings also. So that has also boosted those stocks and ETFs.
All right. Well, I'm sure you'll be keeping an eye on that overall trend. In the meantime, let's take a look at some specific ETFs. There's the Ishares U.S. Aerospace and Defense ETF, ITA, the ticker?
Yes. So this one is the largest, most popular aerospace and defense ETF with the ticker ITA. It has 3.65 billion in assets under management. It's a market cap weighted ETF with 39 holdings, and it has an expense ratio of 44 basis points. It's a Zacks ranked #1 strong buy ETF.
Then there's the Spider S&P Aerospace and Defense ETF.
So the ticker is XAR. This is an equal weighted ETF. It has 36 holdings which have almost equal weights in the ETF. It has about 740 million in assets under management. It is the cheapest product in the space, and this also has a Zacks rank #1 strong buy.
And PowerShares has one as well.
Yes, so PowerShares has about 686 billion, it should be million, sorry for the typo there, million in assets under management. It is more diversified, 54 holdings, and but it is slightly more expensive too, 64 basis points in assets under management. This also has a Zacks rank #1.
And how do these all compare?
So on the last slide, I have the performance comparison of all the 3 ETFs with the broader market ETF, S&P 500 ETF SPY. So as you can see, the Ishares product was the best performer this year with almost 18% return. And one of the reasons for its top performance was that it holds Boeing as its top holding. And Boeing is one of the best performer stocks in the market this year. So that has boosted this particular ETF. The other product by Spider is up more than 16%, and the PowerShares product is up more than 15%, while the SPY return this year is a little less than 10%.
This is definitely going to be an interesting situation to keep an eye on. I'm sure you're going to be doing that. Do you own either of these?
No, I don't.
All right. In the meantime, you can always get more ETF information in the ETF section of our website, Zacks.com. Get over to the homepage, use the Funds tab in the top toolbar. It will help take you right to that section. With Nina, I'm Terry Ruffalo.